Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi Dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. In today's update, we're taking a closer and more analytical look at an important concept that often comes up in discussions about Iraq's currency, the money supply, and more specifically, the distinction between dinar held inside Iraq versus dinar held outside the country. This topic is frequently misunderstood, and it plays a central role in how people interpret potential currency reforms, including the often discussed deletion of zeros policy. Let's begin by grounding ourselves in what the money supply actually means in a real-world economic context. When analysts talk about a country's money supply, they're referring to the total amount of currency circulating within that economy. This includes physical cash and, depending on the definition used, various types of deposits within the banking system. For Iraq, the focus is typically on physical dinar in circulation, especially given the country's historically cash-heavy economy. Now, the key point raised in this discussion is the difference between dinar inside Iraq and dinar held outside Iraq. This distinction is important, but it must be interpreted carefully. Currency that is physically circulating within Iraq directly affects domestic economic activity. It influences inflation, purchasing power, liquidity in the banking system, and the effectiveness of monetary policy implemented by the Central Bank of Iraq. On the other hand, dinar held outside Iraq, whether by individual investors, institutions, or foreign entities, does not actively participate in Iraq's internal economy. It is not being used for everyday transactions, lending, or investment within the country. From a strictly domestic monetary policy perspective, this external currency has a much more limited immediate impact. However, it would be an oversimplification to say that Iraq's central bank does not care about dinar held outside the country at all. While it may not directly influence daily liquidity conditions, it still represents a liability on the central bank's balance sheet. Every unit of currency issued, regardless of where it is held, is technically a claim against the issuing authority. This means that external holdings can still factor into broader monetary considerations, especially in terms of confidence, exchange rate management, and long-term financial stability. The statement also references Basel through compliance, which is a global regulatory framework designed to strengthen bank capital requirements and improve risk management. Under Basel IV, central banks and financial institutions are encouraged to maintain strong asset backing and capital adequacy. While currency itself is not backed in the traditional sense like a commodity, a country's reserves, economic output, and financial discipline all contribute to the perceived strength of its currency. In that context, dinar held outside Iraq could theoretically be viewed as part of the broader monetary base, but it does not function as a direct asset backing tool in the way the statement suggests. Instead, what truly supports a currency's value are factors such as foreign exchange reserves, oil revenues in Iraq's case, fiscal policy, and overall economic productivity. Now let's examine the numbers mentioned in the statement. It suggests that approximately 15 to 30 trillion Iraqi dinar remain inside Iraq. While exact figures can fluctuate and depend on the latest central bank reporting, this general range aligns with past public data regarding Iraq's broad money supply. However, it's important to understand that these figures are not static, and they can change based on government spending, oil revenues, and central bank operations. The more speculative part of the statement comes when discussing the so-called deletion of zeros policy. This refers to a redenomination process, not a revaluation in the sense often portrayed in speculative discussions. A redenomination involves adjusting the face value of a country's currency to make it more manageable for everyday transactions. For example, removing 3 zeros from banknotes would mean that 1,000 dinar becomes 1 dinar in the new system. If such a policy were implemented, the total nominal money supply would indeed be reduced proportionally. So, if Iraq currently has tens of trillions of dinar in circulation, removing 3 zeros would mathematically reduce that figure to tens of billions. However, this does not inherently change the real value of the currency. Prices, wages, and account balances would all be adjusted accordingly. This is a critical point for Iraqi Dinar followers to understand. A redenomination is primarily an accounting and logistical reform. It simplifies transactions, reduces the need for large denominations, and can improve public confidence if managed properly. But it does not create sudden wealth or dramatically increase the purchasing power of the currency on its own. From a short-term perspective, if Iraq were to move forward with deleting zeros, the immediate impact would likely be operational. Banks would need to update systems, businesses would adjust pricing structures, and the public would go through a transition period where both old and new notes might circulate simultaneously. Clear communication from the central bank would be essential to avoid confusion and prevent inflationary expectations. There could also be a psychological effect. Reducing the number of zeros can make a currency appear stronger and more stable, which may encourage greater use of the banking system and reduce reliance on cash hoarding. In Iraq's case, this could support ongoing efforts to modernize the financial sector and increase financial inclusion. In the long term, however, the success of any currency reform depends on deeper structural factors. Iraq's economy is heavily reliant on oil exports, and fluctuations in global oil prices continue to play a major role in government revenues and overall economic stability. Diversification of the economy, improvements in governance, and continued development of the private sector are all crucial for sustaining a stronger and more stable currency over time. Additionally, exchange rate policy will remain a key consideration. The Central Bank of Iraq has historically managed the dinar through a controlled exchange rate system, using foreign currency reserves to maintain stability. Any major changes to the currency structure would need to be carefully aligned with exchange rate policy to avoid unintended consequences. It's also worth noting that large-scale currency reforms typically require a stable political and economic environment. Countries that have successfully implemented redenominations often do so after achieving a period of relative stability and low inflation. For Iraq, ongoing reforms in the banking sector, anti-corruption measures, and improvements in public financial management will all contribute to creating the conditions necessary for such a transition. Another aspect to consider is public trust. For any monetary reform to succeed, citizens must have confidence in the new system. If people are uncertain or skeptical, they may choose to hold on to foreign currencies or tangible assets instead of adopting the new currency structure. This can undermine the effectiveness of the reform and create additional challenges for policymakers. For those following the Iraqi dinar from an investment or speculative perspective, it's important to approach these developments with realistic expectations. Discussions about money supply, external holdings, and redenomination can be complex, and they are often simplified or misinterpreted in online communities. While these topics are important, they do not point to guaranteed or immediate changes in exchange rates. Instead, they should be viewed as part of a broader economic narrative. Iraq is in the process of rebuilding and modernizing its economy, and currency management is just one piece of that puzzle. Progress is likely to be gradual, and it will depend on a wide range of factors, both domestic and global. In summary, the distinction between dinar inside and outside Iraq is relevant for understanding how monetary policy operates, but it should not be overstated. External holdings do not directly drive domestic liquidity, but they are still part of the overall monetary framework. The concept of deleting zeros is a redenomination process that changes the nominal structure of the currency without inherently increasing its value. For Iraqi dinar followers, the key takeaway is to focus on fundamentals. Watch for developments in Iraq's economic reforms, oil revenue management, banking sector modernization, and central bank policy decisions. These are the factors that will ultimately shape the future of the dinar in a meaningful and sustainable way. As always, stay informed, stay analytical, and avoid making decisions based on speculation or unverified claims. If you found this update helpful, make sure to subscribe to the channel for more responsible and factual Iraqi dinar news. And remember, this content is for informational purposes only and should not be considered financial advice.